So written around 100 years ago and set in 2000 BC, The Richest Man in Babylon is a personal finance classic. Considering it was written in 1926 and it's still in print today, I think that shows you just how timeless a lot of the wisdom is in the book. I recently reread it and thought I'd share my 6 key takeaways from the book here in this video. And I'm always surprised we don't hear more people talking about number 6. But first, if you want to sort out your personal finances or learn more about investing, then this is the channel for you. Hit the subscribe button down below and come on a journey with me as I build an investment portfolio and share what I'm learning along the way. So what's my first takeaway from The Richest Man in Babylon? Well, to put it simply, try and save at least 10% of your income. Did you know that 1 in 3 adults in the UK live paycheck to paycheck? That means that one sudden unexpected expense, such as your car needing a big repair or something along those lines, could really see you in financial trouble. And if you find yourself in that 1 in 3 people in the UK that live paycheck to paycheck, maybe you need to take a little bit of a look at your finances, step back, is there some more that you could earn, or is there a way that you could spend less day to day? Because once you can start saving 10% of your income, then you can start building up an emergency fund. You can check out my video here about emergency funds and why that might not need to be as big as you think it does. Or you could start putting money aside for things that you maybe want to do in life, so a nice holiday, or maybe a new car, or some work on your house, something along those lines that you can enjoy and will add quality to your life. The second key big takeaway that I take from The Richest Man in Babylon is to put your money to work for you. This is often also called benefiting from compound interest if you're into personal finance topics. And really it's just saying, put that money to work somewhere where it can earn more money for you. So this is the equivalent of cloning all your little £5 notes, sending them out, and they come back with more pennies and pounds, which you can then send out again to come back with more pennies and pounds. And often the first people ask when they hear something like that is, well, how do I do that? It sounds great. And really, it's really quite simple. So firstly, you could simply put your money into a bank account. Most bank accounts will pay a couple of % of interest, and whilst that's not very much money, over time that can really add up. Now I focus more on investing on this channel, so I'd be wanting to take a little bit of risk with that money and invest it somewhere where I could potentially get higher returns. And the way compounding works is that, say you had £100 and you earned 10% on it in the first year, well then you've earned £10, which is 10% of that £100. But now you have £110, and if you get the same 10% in the second year, you don't earn £10 in the second year, you earn £11 because you earned 10% of £110, and so on and so forth. And even if that 10% return stayed the same every year, the amount of money that you'd actually get would increase over time. Now there are a few caveats to that. Over the last 30 years in the UK, our total money supply, as measured by a measure called M2, has gone from around £500 billion to just over £3 trillion. And as part of that, a side effect is that we get something called inflation. And you feel that as the price of goods and services going up and up in price. So if you are looking to use your money for the long term, just make sure you can try and beat that measure of inflation. Otherwise you're really just standing still, or even worse, getting worse off in today's purchasing power. But the biggest benefit of compound interest is time. If I take the UK's median salary, which is around £35,000, and I take 10% of that, £3,500, and invest that and earn 8% per year from the age of 21, which maybe you've finished university and you've started work around that age, and finish at around 68, which is the state pension age for me. If you're a different age to me, it'll be slightly different. Assuming that was invested in a global index fund getting 8% per year, how much do you think you'd have by the age of 68? We might be surprised to learn that it's £1.8 million, and that's the power of compound interest. The third takeaway I take from The Richest Man in Babylon is to invest in what you know. So we've talked about investing for compound interest, but where's the best place to get that? I think too many people just jump in and blindly take advice that they see online. But I'm not really a fan of that approach because I think it means that you're taking risks that you don't understand. So what do I mean by investing in what you know? Well, it may be that you have a really good business brain. Maybe you already run a small business, and actually it'd be better to invest that money into maybe more marketing or more stock for that business, because that might be the best for you long-term beneficially. Alternatively, it might be that you want to invest in particular companies or in a broad market index fund. Again, these are perfectly good uses of capital, but just make sure that you understand what you're investing in, because if you don't, there's probably risks that you're not aware of that you're taking. What's the fourth of the 6 takeaways that I've taken from The Richest Man in Babylon? This one's maybe a little bit more controversial than some of the other ones, especially if you've been exposed to maybe more of the US personal finance space where this seems to be a bigger thing than in the UK. And that's to buy, don't rent. So why should you focus on buying? Well, for me, I think buying is a no-brainer compared to renting. And that's because the houses we have, especially here in the UK, last a long time. I mean, you can walk down the streets where I live and see houses that are well over 100 years old. We build from materials here that last a long while. And so that house is still likely to be around when you come to retire. And so a mortgage is almost just like a forced savings account. Every month, you're spending money paying off your mortgage, and that's buying you a small amount of equity in the house that you're living in. And so the benefit is that you have somewhere to live, and once your mortgage is paid off, you'll have a dramatic reduction in your outgoings. So that's because your mortgage payments are no longer there, so you're just paying for the upkeep of the house, whether it's council tax or utilities, but you're not having to pay that rent or that mortgage as well. And I think when we get to retirement, we'll all thank ourselves that we took part in that forced savings account so that we've got a roof over our head. And so my fifth takeaway from The Richest Man in Babylon is that you need to save for retirement. It feels like we're being bombarded in the media all the time about negative stories about retirement, whether it be that we won't be able to claim state pension until we're at least 95, it feels like at this point in time. And so the book recommends that you take some of those matters into your own hands. If you were to get the full state pension here in the UK, you'd get around £11,500 per annum. Now that's not a huge amount of money. Of course, if you've paid off your house by that point, it's going to be a lot better than if you haven't, but it's still less than £1,000 per month. And so any money that you can put away now, which can grow and compound over time, you're going to really thank yourself for later when you come to draw on that money. Now, I've done a full, much longer video about planning for retirement and how to tell whether you're on track or not, and I'll leave a link to that down in the description below. Be warned, it's about an hour long, but it's well worth your time just sitting down and understanding some of the concepts. But a good rule of thumb from that video is that for every £1,000 you want extra per year in income in retirement, you're going to need to have around £25,000 invested at the point you retire. So from there you can just work out how much money you want in retirement. Say you want an extra £10,000, well then you're going to need 10 lots of £25,000. So you're going to need a pension pot of around £250,000 when you retire. Add that with your state pension and you'd be getting just over £20,000 per year in retirement. So with a paid off house, that sounds a lot more comfortable to me. And so finally, number 6, the one I see people not often really talking about that much, and that's developing your career to earn more money. Now, it doesn't necessarily have to be the career you're in now. It could be a change of career. Maybe you're at a bit of a dead end in your career and there isn't much progression left to be had. But you could think about maybe taking on a course at the Open University or going to a local college near you, or think about where else you can pick up skills that you can use in the workplace that might get you extra pay or extra responsibilities. Now, why do I think this is often underspoken about? Well, think about your earnings. They compound in your career as well. So say you start off earning £25,000 out of, say, university or something like that. If you can quickly get to £30,000 or £35,000, every year after that, even if you only got inflation-linked pay rises, you're earning a lot more money than if you started at £25,000 and you don't get those pay rises until later in your career. And so let's say you had a 40-year career. Well, if you can earn an extra £5,000 per year by increasing your salary early in your career, then £5,000 over 40 years is £200,000 extra that you've earned in your career. Think about if you were tucking 10% away of that. Now, The Richest Man in Babylon is one of my favourite personal finance books. It's short, it's sweet, it's quite snappy, and so I'll leave a link to where you can get a copy down in the description below if that's what you want. If you're looking to earn a little bit of extra money, I'll put a playlist here which shows what I've been trying to make a little bit of extra money on the side, and I'll also put a video here which is what the YouTube algorithm thinks that you'll enjoy next. In the meantime, hit the like button down below for making it to the end of the video, and I'll see you in the next one.